I think for Bitcoin maxis, this is the hardest thing to understand, is that Bitcoin to me is a genius thing. It makes so much sense in every which way, but it still conforms to the laws of risk assets until it becomes a non-risk asset. And that means that if I'm right and the stock market has 20% downside from here in the next 6 to 12 months, it's going to be hard for Bitcoin to withstand that sell pressure in the overall markets.
Even in the face of a widespread downturn, professional trader Gareth Soloway expressed his belief that Bitcoin is a brilliantly designed concept. He provided a comprehensive chart analysis for Bitcoin and gold, along with valuable insights into what to anticipate from the Jackson Hole event. It's been a roller coaster week for Bitcoin and the rest of the crypto market, with a sudden drop across almost all assets late last week. A significant factor that triggered the market's decline was the indication by the Federal Reserve of a potential need to raise interest rates further. Since March 2022, there have been 11 interest rate hikes in the U.S. as part of an effort to combat inflation. Bitcoin price action is struggling to recover from a manic end to the week, and the fear is palpable going into what could be an equally volatile few days. With $26,000 so far forming the focus for the markets, theories are brewing over where Bitcoin might head next. A subsequent comedown took the market back to the $26,065 mark where it traded at the time of writing. In the interview, Soloway mentioned that unless Bitcoin successfully recovers and secures the levels in the range of $30,500 to $31,000, it's a good idea to be careful with Bitcoin. Soloway mentioned that if his prediction comes true and the stock market drops by 20% in the next 6 to 12 months, Bitcoin might encounter selling pressure due to the broader market conditions. In the short term, gold may remain volatile, reacting to inflation, growth data, and chatter around interest rate trajectory. While gold is comfortably above its main support range 1893 to 1885, it's yet to approach its main resistance area 1946 to 1954. Overall, the market sentiment appears cautiously bullish. During the interview, Soloway mentioned that if we consider the worries about things happening all around the world, gold becomes a really safe option. Here are a few glimpses from the discussion that we'd like to show you. Before we proceed, make sure to subscribe to the channel and hit the bell icon for more updates.
What we can see here is that on the Bitcoin chart here, we tested that area right here, same area right over here, and eventually it failed and came back in. And then we had this upsloping trend line here, which again, it's a trend line, meaning trend. And if you just connect all of these lows, that gave you that trend line. We've broken that. So we are getting a little bounce today along with gold. So that's interesting to see. But unless we recapture this area and then take out this 31,000 area, to be honest, I would remain very careful on Bitcoin. I think overall, the trend is going to continue down. If I'm right and the stock market has 20% downside from here in the next 6 to 12 months, it's going to be hard for Bitcoin to withstand that sell pressure in the overall markets. And that's, to me, where it could come down. The next level's at 25. Then we have major support at 20, and then ultimately back to 15.7. So I'm still in the camp that until we see the stock market really flush out, Bitcoin will remain vulnerable until that point, or until the Fed starts printing aggressively again.
And how do we get that reclassification of Bitcoin that you're just mentioning?
I think it's something that happens over time, right? So we've seen little. So if you go back 5 years, it was a risk asset. There was nothing else about it, right? It was every uptick and downtick was with the stock market. Much more recently, we've seen a divergence in that. For instance, at this low, this is where the bank failures occurred, right? So we saw Bitcoin actually ripping higher when U.S. banks began to fail, and there was questions about deposits. That's really good to see. That tells you people are using it as a safety net. The other thing here was the BlackRock, this little low pivot, the BlackRock spot ETF caused this latest move. So I think you're starting to slowly see it morph, but it's a morphing that's going to take years, not weeks or months. And investors just have to be patient. Over time, as it becomes more and more accepted as a digital gold, then it will be treated as a digital gold. So I think, again, at least, gold certainly hasn't been flashy this year. Last year was a much better performer in terms of its upside, outperforming the stock market and Bitcoin. In this situation, it's been more quiet, right? You haven't really seen a lot of price action. If you go to the beginning of 2023, I think we're slightly positive on the year on gold, but it's not been the amount of upside that we've seen in Bitcoin or in the stock market. But I will say this, in terms of risk versus reward, I think it's still a top play here for an investor. So you want to be in something where you're not going to see 20%, 30% drawdown versus, maybe you're not going to get 50% upside in a year either, but you can still see 20% on gold to the upside. And so I do anticipate by year end, there's this triple top here. Interesting little tidbit on education is that double tops get your big pullback. So here was your high, here was your double top, that was your big pullback. Historically, here's your triple top, you get small pullbacks and then breakouts. And so again, that's kind of the game plan that we're following at this point, where I expect it to start to move up and eventually take out the highs. And I think, again, if you look at the fear of what could happen globally, de-dollarization, the fears of everything else in the economy going, gold becomes a pure play for safety, which can propel it much, much higher.
NVIDIA reported revenue for the second quarter ended July 30th, 2023, of $13.51 billion, up 101% from a year ago and up 88% from the previous quarter. Soloway thinks that in the current situation, NVIDIA's earnings that will be out soon. On Friday, Fed Chair Jerome Powell said the Federal Reserve may need to raise interest rates further to cool still too high inflation. The Fed has raised rates by 5.25 percentage points since March 2022, and inflation by the Fed's preferred gauge has moved down to 3.3% from its peak of 7% last summer. Jerome Powell said it is the Fed's job to bring inflation down to our 2% goal, and we will do so. In the interview, Soloway mentioned that bringing down inflation to 3% is somewhat easier. But going from 3% to 2% is quite tough, maybe even more challenging. He also said that the Federal Reserve isn't likely to lower interest rates until around the middle of 2024.
In this situation, there's a couple things I'm watching. One is the NVIDIA earnings that are just about to come out. They'll be out, obviously, by the time this interview gets published. But if they blow it out of the water and the stock market has a big rally, I wouldn't be surprised if it pushes the Fed to be more hawkish in Jerome Powell's speech on Friday. And the thought process behind that is if the stock market rallies significantly, the wealth effect propels investors to spend more money, which then creates potentially inflationary situations. So the other way could also happen if we see a big drop in the markets, the Fed may be a little bit more dovish on Friday. Based on what we're seeing from Fed funds expectations, the Fed is now not expected to cut rates until mid-2024. However, the question, and we'll find this out on Friday, is does Jerome Powell guide us to expecting another rate cut, another rate hike this year, or just continued pause? And I really think they're probably on the fence. The minutes from last week were very hawkish, but I do think, again, they're starting to see the breaks that I'm seeing in the data. For instance, I just heard this morning that jobs numbers are going to be revised down 300,000, I think 310,000 from non-farm payrolls. And so that really wipes out the gains of the last month, and that has to be something that we start to pay attention to. Getting from 9 to 3 is the easier part. Getting from 3 to 2 is like, that's half of the battle, if not more than half the battle. And it's going to be tough because you have a lot of underlying things that are going to keep pressure on inflation. So I think the Fed will be forced to kind of hold out from cutting rates as long as possible. But my expectations are that the economy weakens so much in 2024 that they actually are forced to cut anyways, even with an elevated inflation number of around 3%. And I think you're starting to hear people talk about this, where it's going to be the new normal, right? The new normal is 3%. We're going to say, okay, that's okay. We just have to make sure the economy doesn't go into depression. So I think you should expect us to start hearing that 3% from the government is okay, and that likely the Fed will be able to cut when that does happen.
The price of Bitcoin initially slipped a few dollars on the hawkish lean to Powell's remarks, but has since bounced to modestly positive on the day at $26,200. The move is perhaps not surprising given the bearish tilt to Bitcoin's price action in the days leading up to the Jackson Hole event, as traders anticipated Powell's continued focus on corralling inflation back to the central bank's 2% target. That wraps up our conversation for today. Feel free to share your thoughts in the comments section below. If you found this information valuable, give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.